Welcome back, and shifting focus to the currency markets, the Indian rupee had a strong run today with the currency marking its third straight session of gains. The rupee closed at 55.43, more than 0.25% of gains coming in for the currency. Let's go across then to Mr. Moses Harding from IndusInd Bank, and he joins us in Mumbai studios. Mr. Harding, hi, welcome to the show. How are you looking at the kind of run-up that we have seen for 3 days now? We've come up nearly 3% in last 3 days.
It's a very great relief in the FX market, all because of sudden change in sentiment. As we have seen, the two major incidents, post-budget and post-monetary policy, these two disappointments pushed rupee down from pre-budget high of 48.60 to post-monetary policy low of 57.32. Now that these disappointments are being addressed by the new finance minister, which is held charged by the Prime Minister, I think that changed the sentiment. Rupee sentiment turned from neutral to bearish. Now people are expecting that PM should now walk the talk so that rupee rally extends below 55.50 towards where it started its journey from 48.60.
Mr. Harding, would you say it's more to do with sentiment or the kind of steps or announcements that have come in from the new finance minister, as you put in, and are you expecting further steps coming in?
I think the issues where the current account deficit, I think with downturn in commodity prices, that issue is largely addressed. Then next is the capital account flows. I think the two tax-related issues that were seen in the budget, that will be unwound. And I think FDI retail, some positive fillip will be there to attract capital flows. And RBI will keep increasing the limits for flows into corporate and gilt debt market. So given the assurance that current account deficit issues are out of the way and capital account flows into debt and equity market are there to stay for long, the sentiment in the forward market will drive dollar supplies. Because last 2 days we have seen exporters running for their life. They were just selling dollars everywhere not to miss the current level if rupee extends its gains to 54 to 52. So it's a supply-driven mode. It's good time for the market. It's a great relief for the Reserve Bank. I think now we need to know whether RBI supports rupee around 54 or allow it to extend beyond 54. That's the question that we have now.
Most of the reports have changed their estimates from 60 to 50 for this year end. Do you see that level coming?
I think, in my view, I think I've been saying here before, 52 to 54 is the right level for the rupee. Now that we need exporters to be supported given the pressure from the external sector, and allowing the rupee to 48 will hurt exports. So 52 should be 52 to 53 is the right level for exporters. And again, with the 30% correction in the crude oil, it will not hurt imports as well. So I think I'll say 52, around 52 is a win-win level for all stakeholders.
Vijay, 4 sessions ago you gave a sell call on 58, and that clearly has made money for you and the viewers as well. Are you making profits yet? Are you booking profits yet?
Yes, Manisha. I'm basically out of shorting the US dollar trade. And not only that, but I do expect a slight pullback in the USD INR. Now, if I was to see 55.30 in the NSE July series on the USD INR, I might just venture out a small size buy with a stop loss at 55, and I would expect to book profits close to 55.80 or 55.90. Now, let's be clear about the fact that we are going against the grain. The USD INR is in a decline, so you're basically taking a contra trade. So exposure levels on this recommendation should be very, very thin. Basically, we are testing the waters. We are basically seeing if the USD INR bounces from here and with what kind of change in open interest and all. So I would remain negative on the USD INR as of now, but I'm just banking on a marginal blip in on the screen kind of a pullback rally.
Mr. Harding, much has been done and said in the Indian markets. How have you read the international markets? Because the EU summit was a bright hope of recovery there, and we did see all the asset classes rally because of that. Do you see that sustaining?
It was a pleasant surprise. Nobody expected this kind of support and a kind of unanimity among the EU leaders. I think that was a very pleasant surprise that provided the rally, and investors shifted to a risk-on mode. But whether it's going to provide a long-term rally, that's a big question. Definitely it's a relief, good relief into the near and short term. That has driven the euro dollar index from above 86 to close to 81.5. I think a long way to go. I'll see a extended reversal in dollar index to 79.50 or so, with euro dollar towards 130 before some kind of stability sets in. So that could drive the rupee to 53.5 or 53. That's my next pit stop for the rupee.
Vijay, how is it on charts? Is it 1.30 showing there as well?
Manisha, I would stick to my view that writing the obituary of the euro has been very, very premature. Now, there are two things to do about the euro. A, wait for a kind of a breakout above 1.2650 and then go long. Or you basically keep buying the dips and hold with a hard stop at 1.21 or maybe 1.20 if you're a little more aggressive. There is just one downside to this recommendation. Unfortunately, in the Indian context, the euro is not a very liquid contract. Had it been even half as liquid as the US dollar, I might have gone on air on your channel and said, go out and buy the euro.
Not happening as of now, but strength coming back in case of euro. There has been strong phenomenon. It's announcements coming in from those EU summit. Mr. Harding, Vijay, thank you so much for joining us with your views on currency. So some more appreciation coming your way as far as the USD INR is concerned before we end this 2012.